Hello trading friends and welcome back to Forex Focus, brought to you by IG, talking gold and its recent reversal from all-time highs, unable to get far beyond 2200 for the time being at least, as inflation comes in higher than expected here in the US dollar rallying. We'll fill you in on all of it. And of course, we'll see where everything goes from here, because it's been a crazy run in gold. Taking a look at the last year or so of action, a lot of range boundedness between 1800 and 2100. And remember that 2100 is approximately that historical high, all-time high for gold prices. Since they've been, available for trading in futures and products, since I have data for at least, all-time highs, they're around 2100. And then in the last week or two, just annihilating that price to the upside, breaking far beyond 2100 and getting near to 2200. I believe the futures, depending on which futures you're looking at, gold futures did break 2200 in intraday trading over the course of the last week, but now reversing from these all-time highs as inflation comes in here in the US a little higher than expected, and we'll dissect that in a second. But you're seeing the turnaround, and of course, the question becomes, is this just a short-term brief reversal on the way to 2200 and 2300 and beyond? Is this just a bump in the road for a bullish trend in gold? Or did this market break this 2100 finally and then kind of sputter out? And could it fall? Obviously a lot of room to fall to the downside, to just get to recent lows, let alone more historic lows. I remember when I started trading, gold was more of a product price between $1,000 and $1,500, let alone, one that in recent years has been between 1,800 and 2,100. So we'll see. Everything on the table for this volatile, precious metal after its break here of more than $20. We'll see where it ends up, but it's been a pretty volatile session after the CPI number, and rightfully so. CPI comes in higher than expected. Might not look like much, but you see their headline inflation ticking back up again, which definitely is freaking people out. But both headline and core inflation 0.1% higher than expected. And the core piece looks good, right? It's every month it seems it's either unchanged or moving lower for the last year. But looking at that number at 3.8% and the headline inflation number still at 3.2%, keep in mind that the Fed is targeting 2%. That's where they like inflation to be if they're coming off of a rate hiking cycle and looking to normalize interest rates lower, which everybody is kind of waiting for them to do. And Fed Chair Powell is kind of teased that idea that he thinks it's likely that they will move rates lower in 2024. But if you're not even getting inflation prints in that 2 handle, it might be tough. And so this could be interpreted as moving the potential interest rate cuts further out in time, which has been a little bearish for that gold market for a couple of reasons. One, if interest rates are going to be higher than expected for longer, well, the non-interest bearing gold market might see less demand, might be less attractive. But two, higher U.S. rates tends to lead to a stronger U.S. dollar. And we saw it here in recent trade off of this higher than expected inflation. U.S. dollar sees some back and forth, but then some sustained gains again, especially the Japanese yen and the British pound. And we'll see if that continues, and if the dollar gets back to its highs, maybe put some pressure on this gold market. But what's been really interesting, you're seeing today off of the CPI number a dollar bid and some gold bearishness. But actually in recent trade, taking a look at the correlations, of course, the negative correlation between gold and US dollar, as you've seen for the last year of trading, pretty consistently, but the level of that negative correlation not consistent at all. A year ago, much stronger inverse correlation, and of course, just as a quick aside, negative or inverse correlation means that if gold is up, US dollar is likely to be down, and vice versa. And keep in mind that it's not necessarily, oh, gold's up, and so it's moving US dollar down, or US dollar is up, and so it's moving gold down. There's usually a synergy. They happen at the same time, right? But they haven't been happening very frequently in recent trade, as that correlation's gone from negative around negative 0.75, more than negative 0.5, now into close really to no correlation, as we've seen in the last year. So still the negative correlation, but you think about the fact that US dollar and gold are still relatively close to their multi-year highs, if not all-time highs, and this correlation starts to make a little bit more sense. But for the time being, we are seeing gold prices moving lower, US dollar moving higher, and the question becomes, to what extent is this that blip on the way to beyond 2200 for gold, or was that the peak and now we're going to see another move lower for gold and resurgence to the highs for US dollar? We will see plenty more data and information to come out of the US in coming weeks leading up to the March FOMC.